So why would we move, right? Why not just stay, comfortable, right? There are 4 banks in our high street. There are 6 banks in our country. If we all, align, right, on our approach, and manage to set pace, we can mitigate those risks. And that's an interesting proposition. But I don't think we're the only players on the street, right? And the world around us has a lot of disruptors, which are changing quickly. Take peer-to-peer lending, right? So Lending Club, if you guys saw yesterday or last night, it was able to go out and raise $650 million, right, in very few hours. Has a market valuation now of over $4 billion. And who are one of the investors behind them? Google. All right? Looking back to the banking space, a medium bank in Eastern Europe is using credit analytics around their customer set to try and figure out patterns of economic need. And they're getting very sophisticated around their hit rate, that when I, Steve Colt, pop up and say, I need a $5,000 personal loan, for something, they know I was about to ask that question, and they're able within 30 seconds to grant me that loan at predetermined rates, right? And where their hit rate, a year and a half ago was marginal, right? They're now, quite sophisticated. These things are changing quickly. Our ability to price, our ability to mitigate the risks, and our ability to be relevant, to our customers against that mix of new competitors and against the mix of new business models is what I think is really interesting from risk perspective. And I at all do not discount the regulatory agenda, but ultimately we as businesses need profits and customers to regulate around, as opposed to simply dissipating and leaving behind what I think our customers and markets need.